If you have a gains or on a foreign life insurance policies, and if you want to know how these gains are taxed in UK, then please watch this video. Hi, this is Gagan from 121 Accountants. My mission is to empower individuals and small businesses with knowledge and service to help them achieve their financial goals. Today, in this video, we're going to talk about foreign insurance policies. So what are foreign insurance policies? Foreign insurance policies are those policies which are bought overseas. For example, if you have a life insurance policy taken in India while you were in India and then you came here, or you are here and then you taken a policy in India. So any policy taken outside UK is called foreign insurance policy. What are the types of insurance policies? So there are two types of policies. One is qualifying policy. Qualifying policies are those policies which are tax exempt. So there's no UK tax payable. And non-qualifying policies are those policies on which you have to pay UK tax. Generally speaking, all foreign life insurance policies are non-qualifying policies and subject to UK tax. But again, you can check, but it also depends on which country the policies are. So it's not all policies, all foreign policies are non-qualifying, some are. So what tax treatment is applicable? Any gains on the life insurance policies are treated as income rather than a gain. So if you made a gain on life insurance policies, that are treated as income, not as a gain. Let's understand this with an example. Mr. Kumar bought a life insurance policy for 20 years in January 2003. And the maturity date was January 2023, after 20 years. And annual premium he used to pay was 1 lakh rupees. But he migrated to UK in January 2011. So he bought a policy 20 years ago in January 2003, migrated to UK in January 2011, and the policy got matured in January 2023. Annual premium for 20 years he paid 1 lakh rupees each year. So what will be the gain on the policy? The gain on the policy will be the maturity proceed, which is 30 lakhs. 30 lakhs was the maturity proceed received. 20 lakh was the premium paid over 20 years, which is 1 lakh rupees every year. And the gain will be 10 lakh rupees. So what amount of this 10 lakh rupees will be subject to UK tax, because he was only in UK for 12 years. So he was only ordinary tax resident in UK for 12 years out of 20 years period. So the time period in UK was 12 years. UK gain will be 6 lakh rupees. That will be time apportioned. So 10 lakh gain divided by 20 years, multiplied by 12 years he was in UK. The amount will be 6 lakh rupees gain is subject to UK taxation. Now, this gain will be converted into pounds. So the forex exchange rate on 1st of January 23 was, let's say, 100 rupees 40 paise. One thing to remember here is that exchange rate is applicable on the day the policy is matured. So this policy was matured on 1st of January 23, the exchange rate of that day will be applicable. So the converted gains will be, in pounds, will be 5,977,000 pounds. So this is the amount which will be subject to UK income tax. That can be 20%, 40%, or any additional rate depending on which tax bracket an individual's or Mr. Kumar's income falls into. But if you made a gain, there are certain reliefs also available. So on the gain, you get a top slicing relief. Although the top slicing relief is a very complex area of tax, but just to give you a flavor what it is, that if this gain is pushing you into a next tax bracket, for example, if you're in basic rate band and it's pushing to higher rate band, then you get a relief of basic rate 20%. Reason being, if that gain is paid to you annually over 20 years, then you might have not gone into higher rate bracket or a next bracket because of the lump sum you're getting now. On the 20th year, you're getting additional lump sum, which is pushing you into higher rate, so that you are not penalized for higher rate just because of this maturity. That's why there's a relief called top slicing relief, which is available to an individual. But obviously, there are other certain rules applicable. So whenever you're calculating top license leave, go through in detail what those conditions are and make sure that you fulfill this criteria. If you made a loss on the policy, then you get a deficiency relief. So what that means is, again, deficiency relief has also a lot of conditions and criteria to apply. So if you made a loss on the policy, there are instances when you surrender a policy, you made a loss, or your policy is index linked. When the time comes to maturity, you haven't made enough profits, and eventually you made a loss. So if you made a loss, losses are always worth money. You will get a deficiency relief on the losses you made. But again, there are lots of conditions attached to it to qualify for the deficiency relief. So when you try to claim that, make sure you read in detail what the conditions are. I hope you understand how the life insurance policy is treated and taxed in UK. And if you wanted to know more about worldwide disclosures or worldwide income, please watch my YouTube channel where I have a special separate playlist for a worldwide disclosure income, other types of worldwide income, how those are treated in UK and what tax consequences they have. Thank you for watching this video. Please don't forget to share, like, and subscribe my channel so that you can keep on watching this future videos which I'm going to post on the same subject. Thank you.